Hey traders, welcome back to another video. In this video, I want to talk about the trend detection and how you can use the trend as a confluence for taking profitable trades. But before we do that, let me tell you about today's sponsor, which is CopyRack. CopyRack is an excellent copy trading and social trading platform that allows you to follow the market leaders and copy their trades. You can also look at their trading profiles and trading history to see how much profit they're making. So whenever they're taking trades and making profits, you will also be making a profit. You can sign up for CopyRack by following the link in the description. Now let's get started. So first, let's talk about how you can detect which kind of trend is going on in the market, if it's a bullish trend or if it's a bearish trend, or if the market is ranging and moving in sideways. So to detect a bullish trend, first we have to look for the formation of higher highs and higher lows, as we can see here. So if we define higher high and higher low, higher high is basically the formation of a high on the swing. For example, here we can see this is the first swing here and this is the second swing. In this second swing, we can see the high of this swing is above the high of this previous swing. So this is the formation of a higher high, and similarly the formation of this next swing, the high of this swing is greater or higher than the previous swing. So this is the formation of another higher high. Similarly, there is the formation of these higher lows. So with the formation of each consecutive swing, we can see the formation of these higher highs and higher lows, which tell us that bullish momentum is going on in the market and market is moving in the bullish direction. So any trade that favors the buy signal, we should consider that, and we should look at other confluences to confirm whether we should take that trade or not. Now let's talk about the bearish trend. In the bearish trend, just like bullish trend, in bearish trend there is the formation of these lower lows and lower highs. So here we can see that there is this first swing here, then this is second swing, third swing. Now in each swing we can see the formation of this next low or high is lower than the previous low and high. So with the consecutive formation of these lower highs and lower lows, we can see the sellers are driving the market in the bearish direction, and that's why the seller sentiment is prevailing. So we should look for the sell opportunities whenever the market is making a bearish trend. Now that you know that, let's talk about the ranging market. Now in ranging market, there is no clear formation of higher highs and lower lows, and market will be moving inside a range, making higher highs and higher lows in a mixed manner. But one thing you should take a look at is price will be moving inside a range or inside a band by touching its highs and lows, as I have made this structure here. So this is how the market moves in the ranging market structure. Now what is the benefit of knowing the trend in the market? The benefit is that whenever we, for example, let's say here we can see the formation of this bullish trend by the formation of these higher highs and higher lows. Now at this retracement, because after this impulsive move we can see the market retracing back here. Now in this retracement phase, if we can find any signal that tells us that now there is going to be a bullish trend in the market, or market is going to move in the upward direction, that will be in favor of our trend movement. So we will take that trade. For example, if we look closely here, we can see the formation of this inverse head and shoulder pattern, which is a bullish trade pattern. Now with the formation of this pattern in this retracement, we should be able to confidently trade this pattern, because we know that previously overall trend in the market is bullish, and with the formation of this inverse head and shoulder pattern, we can take this trade, and after that the market is likely to move in the bullish direction. So let me just go to a chart and show you practically. So in order to detect higher highs and higher lows, if you trade them, like if you look at the charts closely enough, you can already see the formation of higher highs, as we can see here, and higher lows at the points, these points here. We can see these are the formation of higher lows and higher highs. There are different criteria, but overall you can see that there's the formation of higher highs and higher lows. But there's an automated way as well which you can use, and that way is using this higher high lower low strategy indicator. So let me just go ahead and type it, higher high and lower low strategy and impulse. Once we apply it, it will show us the higher high and low lows formation in the market. If we go back, we can see at the bearish trend, there's the formation of these lower lows and lower highs, and at the bullish trend, we can see the formation of these higher highs and higher lows. To hide these buy and sell signals, because these are not very good way to trade, so we can just go ahead inside the settings and turn these off. Now let me just show you how we can trade these. So here we can see that there's a consecutive formation of higher highs and higher lows. So any bullish pattern that we can find inside this market, we should be able to trade that. And we can see the application of this bullish trend here, because here we can see that there's a formation of this bullish pattern, which tells us now after the formation of this pattern, the market is likely to move in the bullish direction. And as we can see, it does move in the bullish direction after the formation of this pattern here. And since here we can see the formation of another bearish pin bar, but now with this very long shadow, we might think that now the sellers have come into the market. But since this is against the overall trend in the market that is going bullish, we will not take this trade, because the overall trend in the market is bullish, and the formation of this bearish pin bar here does not show us anything. So we should not take this bearish trade, because it gets nulled with the formation of another big movement upward in the upward direction. So when the overall trend in the market is bullish and there's the formation of bearish patterns, we should ignore that. Similar is the case with the bearish trend. Whenever there is the formation of bullish patterns inside this bearish trend, we should ignore them. So this is how you can use the trend detection and trend higher highs and higher lows to identify and use as a confluence in your trading strategies. I hope you are able to understand the higher highs and higher lows and the market structure that you need to pay close attention to. If you have any questions, please comment down below. I would love to answer them. Also, don't forget to like, share, and subscribe. See you in the next video. Thank you.